Josh Gilbert from eToro explains why.
Yeah, look, this was a strong report from Meta, Ed, in what is the face of a bit of a trade war, if you like, going on across the world, as we know, and that sort of left question marks coming into the report over advertising demand, which is basically the key driver of Meta's revenue. But it actually crushed those concerns. 16% jump in revenue. A little bit of that may have been helped thanks to this sort of looming TikTok ban in the US, which may have steered some advertisers to sort of Meta's platforms. It's got about 3 billion daily active users. So, a real core there for advertisers to go to. The thing that also sort of stood out was its, capital expenditures rising again. Saying that it would jump, but importantly, operating margins grew. That they were up about 41%. So that's a big relief for investors because Meta back in sort of 2022 spent a lot of money, and at that time revenues fell, margins contracted, and ultimately the stock came under a lot of pressure. So to see that operating margins are rising while they're spending big, mainly on AI, is good news for investors.
Yeah, I remember back then they were spending billions and billions of dollars into the metaverse. But let's keep that AI theme going. Microsoft, their results are out as well. They seem to do pretty well too. And it looks like Microsoft going all in on artificial intelligence.
Yeah, well, look, I think they're sort of the whale, if you like, of AI right now. A very early investment into sort of OpenAI that's sort of paying off. Obviously, that's the founder of ChatGPT. They delivered beats across pretty much all key segments. That sort of lifted shares, much higher, about 7 or 8% in the US session overnight. Same sort of question marks really coming into this, more so from a data sort of center perspective around AI. They did actually, before the earnings call, actually sort of put on hold some of those data center projects, but they actually delivered 35% growth in its Azure, which is essentially its cloud business, and saw AI contribute more to revenue. So that's massive. That's what moves the stock is that sort of growth in cloud. Again, coming back to sort of CapEx, they're spending more money once again, but it's being spent on AI. And I think any spend on AI right now is well placed. But I think when we're looking at those results from Microsoft, this was exactly the type of result that we wanted to see. Solid fundamentals, plenty of long-term promise. And I think it just shows that Microsoft isn't just sort of riding this AI wave. They are really driving it. They're firing on all cylinders. And also, they've got a cash pile of about $80 billion, Ed. And that shows us that it has the tools to sort of keep investing in what's going to be an AI world.